got you again.
Didn't mean to cut you off there, but it takes a minute. It takes a minute from when I hit the go live for it to actually go live.
I just want the viewers to know that you missed us laughing until we were crying. Great content about Bitcoin, which is what this show's about. But our fearless leader in Chris Inks decided to hold back, iron curtain that content, and not go live. So you have him to thank. I'm now tired. And is the show over or is it just beginning?
You know why I did that though? Because people aren't sharing the link. They need to get out there, share the link, and then I'll kind of put that stuff in earlier. See, that's how it goes, right? Hit the thumbs up, hit the share, hit the likes.
Is that Andrew? Can we confirm or deny that's how it's
That's not how it works. No.
Andrew's the resident KOL here. Anyway, what's going on, everybody? Glad to have you here.
I think his jaundice is affecting his the way he evaluates things.
I sent you a lighting kit for Christmas this year. Why aren't you using it, Chris? I don't understand.
Because where is it? Where is it? Because it was that little thing that was about this big, and it didn't really give me any light, man. It was that big. So I mean, you could have maybe had it right here.
You've got a window behind you. You could let in some natural light.
No, because then you can't see anything. Because then the light comes from that on the.
So many jokes. This is great. What's going on in Bitcoin? Is the price down some more today? It's
terribly down. It's down like plus 11,000.
We're buying.
I guess that means it's up, right?
The dip. This is a great day. We should be excited. Everybody that celebrates big green candles. I will tell you, if you had been buying the dip, you should harvest a little profit on these big green candles because they are asymmetric movements off of the mean, depending upon your time frame. Not necessarily on the longer time frames, but on the shorter ones for sure. But
it's going to go up forever from here, isn't it?
It really, we get a really good look at human behavior and emotions here at Arch Public. We got a couple of panicked emails earlier this morning. And these were panic emails because price was going up. And there was panic that, oh no, I didn't buy enough in the 60s. It's going up and it could keep going up. What should I do? This was at 4:30 in the morning and 6:30.
You should go back to sleep and let the software do that for you. That's the point of it.
Well, the panic ensued with a net manual purchase of Bitcoin to the tune of almost $600,000. So now, to be fair, our concierge team got on with this.
As long as 600,000 to me is not 600,000 to some people. So,
what it does is it just reinforces that a guy with 600 grand to deploy and a guy with $600 deployed, the human mind, it works the same way. Like, oh no, it's going higher. I have to get in now.
FOMO is a powerful force.
What we've talked about how it's so flipped to the way it should be.
Yeah.
You should be buying on red candles. People panic and sell on red candles. You should be selling on huge green candles. People panic and buy on green candles.
It's human nature. But that is why, putting training wheels on yourself in the form of automated tools and or becoming a professional trader and learning the craft, if you will, it's counterintuitive. You're always moving counter trend, counter emotion, when you're most fearful is when you should be allocating capital, and when you're most greedy, you should be taking profits. So it's easier said than done, but those are kind of if you go to trading school 101, that's what they're going to tell you.
And a lot of people, especially I found this in trading, as opposed to the other business I'm involved in, right? Trading people really, really want to do it without really investing in themselves, right? They want to do it as cheaply as possible, but cheap has consequences. Cheap has a price, and cheap will almost always cost you more than actually doing, the things that you need to do. And it's not just in trading, it's whatever, right? I mean, you guys, you've run other businesses before. I'm sure you've seen the same thing, right?
Penny wise and pound foolish. Is that what you're speaking to? Yeah. There's stepping over pennies or dollars to catch pennies. Yeah. Those adages exist because it's human nature. It's hard to cure your own problems. It's easy to see other people's and cure theirs. And
absolutely,
when you're doing anything with your own money in particular, if you're emotional about it, you should be honest with yourself about being over allocated, because emotion shouldn't be, my dad had an adage. He would tell me in my younger trading days, I'd be in positions and I'd be just getting my face kicked in, just destroyed. And I'd call him and I'd be running an hour and a half, of hypothesis of, if this happens, this and this, and he would just go in wisdom. He'd go, you know what you should do? You should sell enough until you can sleep at night.
Yeah. It really is amazing how well that works.
Yeah, listen, and let me tell you, you feel a million times lighter when you do those things, and the quicker you do them, the better you feel about doing them, regardless of outcome, because that depth of hell is what will break you as a trader, both financially and emotionally. Like, being married to a position and watching it ride itself down 90%, which in this day and age is, point to any stock, including Amazon, and it's been down 90% at some points. So, that's just part of the risk reward model that you're getting into when you're a trader, and specifically a short-term trader.
Well, having a plan and tools associated with that plan put you in a position to just, again, very systematically benefit. Like I look at a post that our social media team put out yesterday, 17 hours ago. And so, in February, our Bitcoin cost basis for one of our algos was 66,000. We're now at 73.5. Ethereum 1965. We're meaningfully ahead of that. Solana $82. XRP $1.37. Cardano 27 cents. Link $8.74, and Doge at 9 cents. Those are all significantly lower than where prices were even yesterday, and certainly lower than where they are today. And there's no panic, there's no luck, there's no if then this, maybe that can happen, yada yada yada. And you get outcomes that are to your benefit when you have a plan and you have something that can walk that plan forward on your behalf. Because even if you have a plan and you're a human, again, you can have panic moments like I just described with one of our clients up at 4:30, and oh no, Bitcoin's going higher and I want to be more allocated than I am. What should I do? Click. I just bought 2 Bitcoin. That wasn't enough. It's gone $200 higher. Now I just bought 6 more Bitcoin. Like that kind of a plan isn't fantastic.
Well, it's reactionary, and if you are honest with yourself, reactionary trades are always losing trades. It doesn't mean it's losing long term. Again, it's proportionate to your net worth. 600K to some people that would be a crazy bet. That would be exceptionally risky, especially if it was borrowed money, for example. That's crazy. But if it's a drop in the bucket and you're you got $100 million net worth, 600K isn't crazy, especially if you're deciding, hey, you know what, that 600K, my point is this. If you're planning on allocating $20 million of capital into Bitcoin over the next year, dropping 600K, chasing a green candle isn't going to be the difference as to whether you make your goal or not. And it's not going to be the difference monetarily whether, you hit your return percentages. It's not that risky is the point, because it's a small portion of the overall placed capital. If 600K is his last 600K to place and he's borrowed money on it, and that becomes an exceptionally risky endeavor. Why? Well, because again, he's buying on the top of a green candle, which is a big deviation from the mean price that we've been averaging, at least for the short time, last couple of weeks.
Yeah. And so, Bitcoin specifically, this time around, it didn't break, on war news, right? So if we look at Bitcoin for most of its life, it's behaved like that fragile risk asset. I guess Andrew didn't like that. Okay. Well, anyway, no.
Sure.
But any geopolitical shock before it would dump, right? Prior to kind of like this last cycle. But now we're kind of seeing the opposite pattern. So it sold off briefly when the Iran headlines kind of hit. Then it turned around and basically it's up now $11,000+ over the last week or so. So I think that kind of raises a real question worth discussing, which is, is Bitcoin slowly graduating from this speculative trade asset, tech trade, into more of a macro shock absorber, right?
Yeah. Here's the reality. I don't know the answer to that, nor I don't think we could ever find out the answer without one piece of information, which is how much capital did Jane Street use on the quote 10 a.m. to achieve what they achieved. Like if you could really see the ticker tape down to a trade on how potent the high frequency trading algos are that some of these firms have, you could deduce what the price essentially should be. I don't think we're ever going to get that until we move all of the markets to blockchain. I think that is one of the advantages. I think that's the Bitcoin standard. I think that we will see, and Kraken Fib just pointed out, Kraken just got a major breakthrough in their business model as now
the banking thing.
Well, not just a bank that goes right up to the Fed window, like a prime bank, and that's exceptional because they can borrow at prime rates and then they can lend out and make that spread. They're a prime lender, basically. That's a massive thing for our industry. It will not be the last. And it kind of puts a real big finger in Jamie Dimon's eye, based upon what he's talking about, the regulation of the crypto space, because Kraken, is a close second to Coinbase, in my opinion, as it pertains to being, crypto OGs and really integrating at a native level, DeFi, full integrated suite of services. Like if you now have them as in the highest position of authority as a lender borrower in our country, one, I think the cat's pretty much out of the bag. I think Jamie's just dragging his feet at this point.
Coinbase will be next.
Coinbase will be next, 100%.
Yeah. Next. In
fact, it's shocking they weren't first.
Type of access. I mentioned on Scott's show yesterday, again, when you begin to take the building blocks and actually use them to build a picture of where we're at. Let's start with Brian Armstrong and Larry Fink sitting together at the DealBook Summit, several months ago. That's one building block. You take the reality, just something we've forgotten, by the way. Morgan Stanley does not is not in the business of starting ETFs. They're not an ETF company. I don't think they have more than a net total of 8 to 10 ETFs that are Morgan Stanley branded. They went ahead and are putting together both Bitcoin spot and Ethereum spot ETFs. That happened. Then you have this Kraken news that's now happened. Then you have Matt Haugen yesterday talking about Martin Small, the CFO of BlackRock, saying all of our ETF products are going to be tokenized in the next 3 to 12 months. Like, here we are. We've been talking on this show that in the next we started out saying in the next 3 to 5 years.
That's like saying Disney World's going to be open for business in 3 to 6 months. That means it's built. That means they're just greasing chains and getting funnel cake batter in the hopper. You know what I mean? Like,
so we've been saying that, in 3 to 5 years, the world of finance will look so different. And then we change that to like, in the next couple of years, it'll look different. It all keeps happening faster, right? So 12 months from now, based on the CFO of BlackRock, who, by the way, is generally, when you're the CFO of something, you're held accountable for not only things you put on paper, but things you actually say. The way that the world is going to look when it comes to the amount of trading time that you're up now 24/7 instead of 9 to 4, 9:30 to 4, 5 days a week, we're going to blast through 24/5 very, very quickly.
Yeah.
Right. Kraken, by the way, last week announced 24/7 perps on their associated with stocks on their platform. Previous to that, they had announced 24/5, and then they moved again to perps associated with stocks 24/7. Robinhood will end up doing the same. Coinbase will end up doing the same. Gemini will end up doing the same. And then all the legacy companies will have to do the same. Why? Because the trickle of volumes will move to the 24/7 platforms and go away from the not 24/7 platform. And they can ignore it for a little while, but at some point that number gets too big and they can't ignore it anymore. And now they have to go 24/7. I mean, go look at Interactive Brokers. There is some sort of announcement over the last couple of months. Interactive Brokers talked about going 24/7. And
CME has said the same thing.
Something about tokenized. Like, these are legacy companies being forced into innovation by the likes of crypto. And it's
Bitcoin standard.
Yeah, it's really something.
Yeah, and I love that you bring up, that what we've been talking about, because the truth is we've gotten a lot of hell over the last, year and a half plus that we've been doing this show, because everyone's like, oh, that stuff ain't going to happen, or it's not going to happen that quick. And yet we're, even as bumped up as our timelines were, they're just getting blown out of the water, right?
Yeah, we can't keep up. I mean, it keeps moving faster than we thought it would. And I'm blown away by the CFO at BlackRock saying 3 to 12 months. I'm blown away by that.
That was absolutely crazy.
Think about it.
It goes without saying, though, if you think about the fact that they've been rewarded handsomely in market share for being first to grab this industry by the horns and wrestle it to the ground. They're going to want to continue that pace, right? And he has been talking about tokenized everything for a year now, literally a year. I mean, so it doesn't surprise me. I think in this day and age, it's that's the beauty of technology, and specifically AI integrations, and coding has forever been changed. And if you're in that space and you're using AI, your mind is blown right now. There is nothing that's been more disruptive that I've ever seen in my entire life than what is going on in the coding space right now, and AI. It's unbelievable. Because projects, just think about, like, if you're an innovator and you have a certain stack of code that you've been working off of, and that stack of code is your livelihood. It's how your customers interface with you. It's got your user interface, front end, back end. It's got all your payment portals attached to it. It's got multiple API pulls. It's got custom library databases. It's been custom built over the life of your business, right? To help your business succeed. That's a very custom thing. It takes somebody that's a software engineer getting into that library of content and spending like months to understand the architecture and what it looks like. That is a very costly endeavor to hire somebody that's talented enough, that understands wireframe and understands all of those separate languages. So most of the time it's a team of people that's doing this type of stuff. So imagine, like, if Andrew and Chris both have companies and I have a company and we want to integrate our stacks. It requires teams of engineers, months of integration time and cost and failures. And now you literally just load all of our databases and our stacks into AI and go, hey, can you build bridges? We want to tell it what you want. And 60 seconds later, you're literally testing. You're testing it. Like it's just mind-boggling.
It's crazy. Yeah.
We've accelerated a timeline and reduced the cost by, hundreds of thousands of dollars and 6 months down to $350 a month in subscription fees and 25 minutes.
Yeah. Yeah. And it's just going to keep, accelerating with that. Right. I mean, it's kind of like government power, right? Government never grabs more power and then gives it back, right? It always accelerates how much more it's grabbing. So it's the same thing here. You get in there, AI comes in, accelerates the advance, right? And that's just
where there's natural law dynamics here that Bitcoin have proven. And energy is the natural law dynamic that you have to attach these types of networks to that will provide equal access to all human beings. How do I say that? Well, because at a rudimentary level, the sun is our greatest source of energy. It's the free source of energy. It doesn't. And so if you can harvest that and turn it into proof of work power, as a global community, we have the ability to overcome any centralized energy source, right? A nuclear plant can't compete with 7 billion people that have a solar panel that's this big in their front yard. It can't compete, not even by a long shot. And so there's just a natural law of scarcity across the universe attached to energy that makes the proof of work network and the energy consumption attached to it monumental as it pertains to like how we secure networks going forward and how we make sure they're democratized, that they're accessible, and that they're not controlled by central agencies.
Yeah.
And the proof is like no government controls Bitcoin right now, does it? No.
Right.
Nor could it.
Well, and speaking of Bitcoin, I mean, when again, when we're looking at that, it really is the fastest escape hatch on Earth, right? I mean, something happens. I saw something recently. It was either today or yesterday, some report, and I haven't been able to verify, but they were talking about something like 2 million in crypto assets were leaving Iran every hour. And so,
where was it going?
Outside of Iran. Like I said, I didn't get a chance to delve into this. I just remember I'd seen the headline.
Off Iranian crypto exchanges. I didn't even know there was any, but you see what I'm saying? Like if it's crypto that's moving, it would have to be, and you wouldn't know if it was hardware wallets,
right,
cold storage wallets where geographically they were being held. It would have to be some exchange that's being shut down and or some central entity that is a holder of it that's dumping it.
Yeah.
I would say, I bet, you know what I bet it's related to? Because I did read an article. I bet it's related to the mining efforts over there. There's so much energy over there. There's a lot of mining. And I bet you there is quite a bit of Bitcoin holdings or any proof of work network holdings over there.
Yeah. Yeah. Now that you mentioned that, I think I saw something again just recently about how inexpensive, like it's one of the cheapest places in the world to mine Bitcoin or something.
Free.
Yeah. Yeah. So
clear off gases everywhere. You can just put a cogen generator up and you've got a money tree.
Yeah. Well, so we got this, right? So we got the geopolitical risk going on. We've got Iran getting whooped up on harder than it was even last time Andrew was bringing it up. Remember, Andrew was speaking last time about how, Israel hit Iran and we hit Iran. We hit the nuclear thing, right? Is what it was. And the markets were just kind of shrugged it off, right?
And we're actually in a war with Iran, and we're 2% off the S&P 500 all-time high. Like, Monday and Tuesday, there was a tweet going around that got popular that said Monday is going to be the worst day in the markets in history, and it was like flat. Yesterday was actually down. Today we're up almost as much as we were down yesterday. Like,
recovering all that.
And then you go to, again, what do ETF inflows look like? So we've had, I think, 6 days in a row of meaningful Bitcoin ETF inflows. Eric Balchunas actually, made a tweet about it and gave the data. And then he made a joke and it says, "Hey, everybody on crypto Twitter, call your parents and tell them thanks." Because boomers keep shoveling money. It's down 22% so far this year, and a little less than the net 50%. And again, boomers are trained, investors are trained, and have been now for 30 plus years, that when an asset is down, you just add more money to it.
There's no emotion to it. They're not buying it because they love Bitcoin. They're buying it because they hear nothing but negative news and sentiment. And when they hear things like 5 fear greed index, 5 score, that's the stuff that they get excited about, honestly. I mean, because it's just a matter of time before it's 15, and that's a 3x, and it's 50, that's a 10x. It's just orders of magnitude more opportunity when you're able to buy at the bare bottom prices or at the very low.
Well, and again, think of the story that I told to start this podcast. That individual was not a 30-year-old. He was probably 2x that number. And so his thought process is, I need to be more allocated to this asset. Oh no, it's going up. I didn't get it at a cheaper price. It may not be any cheaper than it is right now. Bang, give me more. I want more at this price, right?
Well, he's going to sleep better at night knowing that he owns it and worrying that he's not vested in it. And, our community does an exceptional job of promoting the God candle, right? And we all know about it. We think about it. You want to believe that today's the day where you wake up but again, those are just exceptionally rare occurrences. You can't build a prudent investment strategy if you're just betting on the God candle all the time. That's not how you place capital. But
Oh, go ahead.
I was going to say, again, it's relative. If he's placing $20 million into Bitcoin, 600K one buy, isn't that a deal?
Exactly. But yeah, speaking of the ETF inflows, Andrew, you said meaningful. I think it's been like something like 1.2 or 1.6 billion over that time, hasn't it?
Yeah, it's 1.5. Yeah. 1.
And then today's move, I wouldn't be surprised if we're hitting 700-800 million today.
Yeah. So, I mean, listen, ETF flows are, a meaningful part of Bitcoin movement right now. Not that it's the only thing that matters, but it plays a huge, huge, huge role. And so, it's not necessarily a crazy thing that we've moved from 62 to 73 when you've had $1.5 billion of fresh capital coming into spot Bitcoin, right? Probably should be that. And, the playing funny games, Jane Street stuff has gone away, at least temporarily. So now we're looking at a more pure one-to-one action reaction type of outcomes right now. And so, it's acting the way that it should. Now, if we get a day where there's 700 million of outflows, well, I would expect Bitcoin to go down. But that's not what's happening right now. And again, what's interesting is we are in the dead nuts center of people having their first of the year meetings with their financial advisors, and they're looking at their allocation. How did you finish last year, and what should we do this year? Well, if we're increasing our allocation to digital assets, the first one they're going to do is Bitcoin. They may do a little more with Ethereum. That's probably where they will stop. So this influx is not only both, hey, buy on the dip, but it's also probably completely new allocations that say, hey, you know what, we should probably look at this and let's put 1% of your portfolio towards this particular asset class. So it's new money too. And it's, again, right in the middle / near the end of Q1, right? We're into March now. So it's the last month of Q1, and people are moving through those meetings and making additional and new decisions and new allocations. And it's showing up in the fact that everybody was convinced, by the way, that Bitcoin was going lower. It was absolutely going to gap.
30,000. That's what I heard.
Yeah, we're going to gap to the 50s, or we're going to be in the the 30s. And Mike McGlone's nuts at 10K, but we certainly could see 30K, right? That's what everybody was saying, and none of that happened. Didn't happen. I mean, we effectively declared war on Iran and have been bombing them for 4 days, and no, we haven't seen the 50s.
Timing is everything, right? In business, in trading, in life.
Yeah.
Timing is everything. And what I have seen out of this administration is pretty impeccable timing as it pertains to the economy. It's like right when you think something is catastrophic and the sky's falling, there's a litany of positive dominoes that then fall that, I have to believe, and this is bias, that we're going to have a really, really strong year. And I think this is one of many dominoes that start to fall. I think that we may get a ramrodded Clarity Act, and that would be amazing, because that would be, it's no different than the Fed chair. We think about all that, and that's going to get cleared up. Interest rates going to get cleared up. We're in war, so the printing presses have to start printing. All of those things could point to an exceptional report card, if you will, for old Donald Trump at the end of his term. So it looks to me like this is all a setup of like the rounding bottom, doom and gloom, everything's falling apart, and then boom, boom, boom. Now I may be wrong. The market may prove me absolutely incorrect, but that's the way I see it.
And I think, really, I think Andrew's alluded to this multiple times. The biggest story over the last year and a half has been just how much accumulation has actually happened with the ETFs, right? You generally don't hear about them from your normal suspects there on your normal crypto Twitter crowd, unless they're like dying, right? Unless it's a big outflow day. But realistically, the outflow overall has been pretty minimal, right? I think we still have some like 90 or 95% in spite of the 50% drop off the all-time high, and in spite of all the OGs selling, and in spite of all the miners selling, right? Because Lord knows they're squeezed with hash price going down and hash rate going up. And then you have, what was it, BitDeer last week or whatever, that sold all its Bitcoin treasury. And you got everybody freaking out this week because Mara has passed a thing where they can sell now their treasury if they decide to, because everybody's kind of
about that coverage, right? They just said in a document, hey, we're allowed to sell Bitcoin if we want to. That turned into Mara's going to sell all of its Bitcoin, right? And that feels like a week ago now, because Bitcoin does what it does. It always goes the opposite direction that sentiment probably thinks that it's going to. Again, when we were at that moment yesterday, everybody's thinking, well, if this happens, more so when it happens, we're probably going to move meaningfully lower. That's a lot of Bitcoin. And then next thing you know, we're up about 10% from there. So it's just all of these things are
immature takes. They're in my opinion, they're just like, the market is maturing out of those types of narratives. That's not a prudent investment take, is my point. Like, that's the smash by crypto bro mentality of, it's all or nothing. We are 100% or 0%. And
it gets clicks.
That it gets a lot of clicks, but it's not how real finance people work.
Exactly.
Real finance people, they go, okay, there's volatility in the market. We're going to take advantage of that. And if I believe in an asset, 100%. Like, I love it to death. And I think it's the greatest asset, like I do with Bitcoin. I'm still going like, okay, what's a prudent percentage for me? That's a different, but let's just say that's wildly more than what anyone would recommend. Let's say that's 50% or above, right? At any point in time, if you have 50+% of your net worth tied into an asset that has this type of volatility, the next question, in my opinion, that should be asked is, at any given point in time, am I 100% of that 50% placed? Am I 80% placed? Am I 50% placed? You shouldn't just be 100% of the 50% at all times. Why? Well, you're not harvesting any of the volatility. You have no dry powder to take advantage of the dips. You don't have any opportunity anymore to actually use the volatility for what its best purpose is, which is buying when it's insanely cheap, when it crashes in price. So if you're just at 100% max allocation all the time, you're missing the point. Whether that's 50%, whether that's 20%. If I'm a 20% guy, unless we are at bare bottom prices and have been in it for a year and it's just continued to crash. We're at $10,000 Bitcoin. I'll always have 30% of my Bitcoin capital dry for more buying opportunities. That doesn't mean that it's perfect. I can run out if that drought lasts forever. But if you manage your capital according to what the likelihood event, which is like, how long do I need buying events for 80% of the market conditions, over the last 20 years, give me 18 of the 20 years that this strategy would work. Right. And then, if it's a 2-year anomaly, it's a 2-year anomaly, but at least you're set up for systematic success at that point,
Well, see, and that's what you all do with your software. That's what you did. That's what I teach, that's what Fibo teaches. But we're the ones that people don't listen to because we don't do the extremes. We don't guarantee price is going to do A, B, or C. We don't say, listen, you need to be all in or you're a freaking moron. You're so stupid. And, I'm 100% and whatever. But, and unfortunately, but you guys have been around like me and like Fibo. We've all been around markets for decades, right? Nothing changes. Bitcoin is not special in that manner, right? It's the same person, that same persona that comes into every market, every cycle, every damn time, right? And so, I mean, it's like we can say this over and over again, but the same people are going to keep coming in every time and do the same things, and very few people are actually going to catch on. Very few people are, and when you look at it, that's partially the reason why, most of your retail traders are out of the markets, pretty quickly with having lost everything, right?
Well, and I will say that's where the AI is going to be chasing that bloody curve, and it's going to be a bloody one. If you start getting AI involved in trading, what is it looking for? Well, it's looking for the edge on the most asymmetric risk reward opportunity, right? Which is chasing the anomalies in a way where you're buying lottery tickets, but the cost of the tickets, right, are in the guaranteed number of tickets, the odds of you winning. Yeah, I gave you a thumbs up. But have you guys seen that article about a group that has done this? They've mathematically figured out at a point how many tickets they would have to buy to basically guarantee themselves the Powerball.
No, I haven't seen that.
Yeah, and this is a real thing. And they figured out that the cost was less than half of what the Powerball winnings were, and they did it, and they won. And they proved that mathematically, you can kind of bust the Powerball if there's a certain number of winnings compared to a certain number of players in the active pool. Same thing applies with, AI and trading. It's going to always chase the asymmetric opportunity, which is great for retail, because all we have to do is focus on the tried and true, boring, prudent method of dollar cost averaging with after-tax dollars into the hardest asset that man has ever created. You do that simple thing, you really can't miss. Now there's edges, you can get an edge here and there in that general strategy. But if you fall in that strategy, even manually, you can't miss over time. I've never met someone that has had exposure to Bitcoin for more than 5 years in a consistent capital placement ratioed way, like where they're consistently investing, where they haven't been way up in their position. Not one, never.
Yeah.
So, you know.
But that's the hard thing, though. Again, we're speaking against human nature, and human nature gets amplified on social media, right? This is why I always warn people: listen, if you're trading, if you're investing in markets, get off social media. Because it's just you're already predisposed to act and react in a specific way. Again, this is what I was talking about earlier. What we've seen through every other market over the last 30 years. And Bitcoin being no different. You see, human beings are predisposed to act a certain way, and if you're getting on social media, you're getting that shoved in your face 24/7, and it just makes it that much more ingrained. It makes it that much more difficult to do anything different. So again, you're speaking logic. You're speaking of, listen, just pay attention. This is all you need to do, and the odds are significantly in your favor that you're going to be ahead. And yet most people won't actually do it, or they'll start to, and then that human side will kick in, and they'll get out before the 5 years or whatever, and then they'll be like, look, it didn't work.
But I think we live in that transitional period. I think information and access to information and access to technology are absolute game changers and disruptors, right? If you just talk about Bitcoin from access, to financial network perspective, I know a lot of people that literally live 90% on that network and 10% in the real world. So,
Yeah.
You literally can do that. So financial literacy has been hidden from people. This new financial literacy is daunting. It's, somewhat complicated. It's becoming easier, but we live right in that, brackish waters. Fast forward 20 years from now, these shows are going to be comedic. I mean, they are going to look funny because we're talking all the time about all of this messy integration and all of the gears of the car. And, the future cars don't even have gears. So it's like, it's going to be archaic beyond archaic. But it's fun in the moment because there's, again, a lot of wealth over in the traditional side of things. Most of the wealth is over in the traditional side of things, and it's being passed right now into this new era of technology. And what a time to be alive! It's crazy. I remember my dad telling me stories about. I asked him one time, very successful guy, what was your edge? Like, how did you, coming out of college, make yourself exceptionally valuable? Okay. And he went to law school, a CPA as well. And back then you could have a CPA firm and a law firm under one family office, and you could do all sorts of really great deal making in that. But what he said, is essentially like, as a CPA back in those days, if I could take a company digital, if I could take them from paper to, the computer, to floppy disk, to the computer, to what is it? Lotus 1-2-3.
Oh my God!
Take it to Lotus 1-2-3. They looked at you like you had a magic wand and you were just the king of the universe, right? That was that big of a change, right? And then you had the Microsoft era with the Intel. Then now you have the Apple era with the integrated iPhones. And technology just changes things so rapidly. Why are we so, oblivious to it when we're living in the moment, thinking like all the things we're talking about and all the things that we're working on and struggling with, these are impermanent. Like, fast forward a month from now, we're not going to be talking about the same stuff. And this thing is moving faster than a bullet train moves,
Yeah. Andrew, so when we, Tillman brings that point, most of the money is still concentrated, obviously, with the boomers and whatnot. We know that millennials, maybe the next one, they're kind of really interested in digital assets. But I think I saw something recently where the newest ones coming up here that are hidden, of legal age, are not really so interested in digital assets right now. Did you see that?
What I would say about generations, people forget that the majority of wealth that's going to be passed down from the boomer generation is first going to go to Gen X.
Yeah.
It's going to go there first. And that generation is the kind of generation that does have an interest in digital assets, does have an interest in Bitcoin. You can make the case that Gen X kind of built Bitcoin. That's probably the best way you could lay it out. So there's going to be a move, deeper into digital assets. Again, it's not rocket science. Like, why does BlackRock continue to go deeper and deeper into the digital asset space? Because we can talk about it on a podcast, but these guys have figured out a long time ago that this is, this move is going to be made. And these generations that they've done study after study after study after study after study. So they're prepared for when this happens. And so they know that the folks that are going to inherit all of this cash, what their habits are going to be, how they'll adjust in some way, and why they will adjust. And they're prepared. They're uniquely prepared for it. So when they say that they're going to, by the way, tokenizing all their ETFs, they've got 12 billion in assets that they manage.
Yeah.
Like 11 trillion of it is ETF money. So, I mean, we're talking about trillions of dollars moving to tokenized and, blockchain type of connectivity.
Well, and mark my words, day one, every one of them will be on Coinbase. You'll be able to trade in and out, which will give you an exceptional, think about that. You're able to hedge in paper, trade in paper, and buy in spot on the same
thing. Yeah.
Same asset, two distinct ownership classes. That's crazy. That's awesome. That's integration at its finest.
Yeah. And so they're prepared for it. They're ready for it. And there's going to be, I'm not all that interested in, Gen Z or Gen Alpha or whatever. That they're not in a position. They're not going to get much of that money. They'll get a small amount of it, but they're not going to get much of it. And the biggest reason why they're not going to get much of it is because when boomers get to the spot where they're giving their money away, they're either dead or they're incapacitated, and Gen X is going to be the one taking care of them, right? So
yeah.
It's going to stay one generation to another mostly. And that generation is prepared for this change in finance. It is going to be interesting 20 years from now. Tillman and I's kids, right? They're going to look at us and think that it's hilarious that markets used to trade from 9:30 to 4 Monday through Friday. Like, what were you guys doing? You guys lazy? Like, that's weird. Like, that doesn't even make sense. And so, yeah, it's the shift and change and what's on its way. The evolution of finance is on the precipice, and it's exciting. It really is.
Well, using capital as something that has earning potential is something that most people aren't privy to. Most people look at earning potential as like, I can buy a house and rent it out, right? But most people don't look at the 100,000 that they have to put down on that house as having the same or equivalent earning potential, because they're not exposed to investments in the same way that most people who have, several $1 million to place are exposed to. And that's changing. That bar is going to lower down to where you're going to be able to earn 8% on your deposits if you put a smart contract in place that locks up $100,000 for a certain period of time. Like, that's going to be here before we know it. That type of access, that type of inclusion in the financial system is only going to bring more liquidity into it, more activity into it, deeper liquidity pools, more integration across multiple platforms. Like, it's finally the way that money should be. And it's going to open up everyone's eyes to, okay, so earning money I don't have to now be in a rush to place it into assets that have corresponding liabilities attached to it, like real estate. You buy enough real estate and you start wondering how much is too much, because you got property tax bills coming in left and right. You got maintenance bills coming in left and right. You got lawsuits from people tripping on your stairs and you not shoveling your parking lot well enough. Like there's those problems compound exponentially the bigger the asset pool gets. When you own digital assets that are attached to growth potential of like Bitcoin, for example, you have this growth potential. You now can deposit it and earn yield on those deposits as against the value of those deposits. You also have the growth potential with no corresponding exponential liabilities. That is like the holy grail of investing. I mean, literally, no, I don't know. I can't think of another asset that provides you the same thing. It'd be like if you could own gold right now and take it down to your bank and go, hey, I'll let you hold this gold, but give me 8% a month on it. And they'd go, yeah, let me have your gold. And they start just ripping cash to you at 8% a month. That's where we're headed right there.
Yeah. And, it just goes back to the same thing I said back, I think kind of like around the time we were first starting this show, where I said, we're living through what is probably, and this was before AI even really ramped up. And I said, with Bitcoin, with the monetary system the way it is, with AI coming up, I said, we're living through what is arguably going to be the most significant point in history, the biggest kind of leap that we've had. Not that there haven't been other leaps, but so many things have come together at one time right now versus previous points in history that we are living through this point, and most people are going to miss it, right? If you're listening to the show, at least you're hearing us say it. But even that, for most people, they kind of, the show's great, they'll think about it a little bit, and then they'll kind of forget about it until the next show, But for most people, if they're not in crypto Twitter, if they're not in crypto AI or AI Twitter or whatever it's called, if they're not doing these things where they're bombarded by it daily, they're kind of living right through it. That you blink and next thing you know, the technology's gone from here to here.
Well, you have to ask yourself disruptive questions, though. Like that, I'll challenge the viewers if they're thinking along those lines. Like, no different than go ask your parents, especially if you're my age. So, go ask somebody in their 70s, well, how much did your first house cost you? Where did you buy it? Mm-hmm. My parents can tell you about houses that they bought in downtown Aspen for $400,000. And those same houses are $8 million today. So Aspen's an example of an extreme market, but there isn't a market down to the smallest town in Alabama that hasn't had a 5 to 10x increase in property values over, your parents' lifetime, basically. Well, Bitcoin, has the same type. It's the same type of growth. It's long-term growth based upon inflation of our dollars or purchasing power, being lost in our dollars. If you believe in betting on those types of assets, you should have some exposure to Bitcoin, considering to the point that I made earlier, it doesn't have any cost of ownership liabilities. Yeah. You can own it with all that potential being there without going, oh man, I own too much. This is costing me a fortune.
Yeah. And I think, when you're looking at that and you're seeing this, I mean, again, we can sit here and it makes logical sense, right? I think anybody listening goes, okay, you know what? It makes sense. And again, we're not saying put in 80%. We're not saying put in 50% of your net worth. We're saying, listen, you should be allocated in some degree, right? And yet most people still aren't doing that. We talk here, a lot of people are like, oh, we're still early. We kind of are in terms of ownership, right? Of adoption rates when you think of the overall global population and how many people actually have some sliver of Bitcoin. And so it remains interesting, what happens when we finally get to that global mass adoption point?
Yeah, we're not Not that early anymore. I mean,
yeah, we're not. Yeah, but still,
I mean,
we kind of are though. In the grand scheme of things.
What are we like? 17 years in or something like that?
It's all relative, in my opinion, to a human's lifespan. Like Bitcoin, if you're going to measure it against anything, you're just going to measure it to how much exposure I get to the curve. You see what I'm saying? Because, fast forward 20 years from now, I think the curve will probably be even less steep than it is now, right? But you'll still have an asymmetric opportunity, and it'll still be the hardest money, and it'll still be, the base asset whereby which people save. But you're not going to Andrew's point, get the same curve that the people got when they got in at 2009.
Right.
Well,
right.
Listen, I think everybody in the crypto space would be thrilled beyond belief if Bitcoin closed out the year at 110, right?
Yeah.
I mean, that would be let's just call it 40% year. But there'd be a certain segment of the space that wouldn't be happy with it because it didn't go to all-time highs, didn't get above there. And okay, so
250.
Yeah, I mean, so
well, to your point, it's a 50% move from here. We close at 110. We've literally moved up, 50% move, and people wouldn't be happy. Even when you said that, me as a Bitcoiner, my inner Bitcoiner was like, well, that sucks. 100. Why 110? Why not 170, Andrew?
Yeah. And so that's kind of the point about, are we early? Are we not early? We're not early. When we've gotten to a spot where there's such a disconnect between, again, the Bitcoin crypto Twitter silo and like the rest of the population, right? Like if you've bought into the ETF over the past year, again, this is the lion's share of the buying that's happened over the past 2 years. If you bought in at any time over the last 2 years and you go to 110, like 95% of those people will have made money. They'll be up on their investment. They're going to be happy about that, right? And so, there's this subculture of the work, in the space that we do our thing, that unless it's a 50 or 100% or a 200% of something, then it's not worth spending your time on. And that's just so disconnected from reality. And, I said it at Pomp's conference a few weeks ago, where I said, Mark Yusko and effectively Larry Fink think that, 3-4 years from now, Bitcoin's going to be at 600K. That's a 10X from here, basically. Yeah. Like if in 4 years we've gone 10X, what's the average annual return of that number? It's a lot is what it is. And so, is that terrible? If 4 years from now we get a 40% return each of the 4 years from where we are today, is that bad? I mean,
if you invest 10% of your net worth in an asset that 10x's, then you double your net worth.
Right. Well, again,
with 10%, and if that same asset that you have 10% allocation into gets cut in half from here, you're down 5%. So you're trading a 5% potential risk if you believe that's the potential downside of the risk of holding Bitcoin now. Well, you're literally a 2x on your net worth. That's an exceptional risk reward ratio.
But even if it's 40% a year for the next, 4 years, I think that probably puts us around 200K or so. That there would be a lot of people that would say, "Oh, that stinks. I mean, maybe my money goes somewhere else." And you're like, "What are you? Wait, okay. And then you're just not a meaningful part of the conversation then." So
it just tells you that you're addicted to the drug of the markets. People would sometimes rather be high than right. And
well, and the three of us, we're old enough to have been through what most of the markets were. I mean, the stock market, if you were getting 15% in a year, you were like, "Holy crap!" You're getting 10%. You were still like, "Wow, it's amazing."
I know currently some of the most privileged, wealthy people that get invite only into certain funds that are 15% producers over a 20-year, like that. It's a holy grail invite only stuff, limited allocation. We know how wealthy these people are and how many favors they can do for us for letting them in the fund types. That's insane, to Andrew's point.
Most of the people out here with Bitcoin, especially, newer ones, what do they know? They know they've never been in other markets. Bitcoin was their first kind of exposure to a market. It was skyrocketing year after year after year, right? So you've got those folks, and that's what they expect, right? They're not grounded. That's what they expect. Two are the people who are coming in now who heard stories of that. And again, that's their reality, right? But the real world says, man, if you were getting that smaller percentage, that was absolutely amazing. And I think that's the difference they have between like us when we're talking about it, and then you get somebody else who's listening in whose only exposure has ever been Bitcoin, and especially if it was the exposure at the beginning stages there, not realizing it doesn't continue like that forever. That isn't how it works. That's the fringe at the beginning where it's all retail dominated, where it's really low, And how do you bring reality to somebody like that?
I've got a call. I've got to jump on. So I'll leave you guys with this. The only thing you can control in life is when your co-hosts jump off the call.
I have no control over that. See, he lied. I have no control over that.
Yeah, no, you don't have any control.
But anyway, I think that's kind of the thing we kind of, get through when we're up here talking and we're trying to be sensible and realistic about things. And, just because we've got that experience over decades in other markets, I think that's probably the hardest thing to overcome with people who are just getting into markets through Bitcoin or have heard stories about previous Bitcoin or, came in with early Bitcoin. And, I don't know that we can ever get them to see the reality of like if we got, like you said, if we were doing 40% year over year, I mean, holy crud.
Yeah, that's again, that would be, and again, we'd be at, 200 to 250 if that was the case. And, some people would be thrilled with that. They'd be like, well, it should be at 500K. Why isn't it 500K? Who's manipulating the price?
Why isn't it $1 million?
Yeah. Well, I mean, think about it in the next 2 years, if Bitcoin does a slow bleed higher and ends this year at 92,000, right? And then next year it ends the year at, 117,000. Like, that second year isn't a 40% move. It's more like a 28 to 30% move. Again, there would be people that we've known for a long time in the space who would finally capitulate and quit, be like, I'm going to do something else because this isn't exciting enough for me anymore.
Yep.
We've seen some of that over the past 18 months here in this space. And so, I mean, again, we were at all-time highs in October, man. That was 6 months ago. And we have seen people capitulate in just that 6-month window, right?
Yeah.
People that are seen as, paragons in the space say, I've sold all my Bitcoin. I don't find it all that compelling anymore. I'm moving on to some other projects.
Yeah.
In 6 months, in just 6 months.
6 months.
When our version of a bear market is where the top was for the previous cycle. It's a really unique study in human psychology. It really is.
It's a blast. Yeah, for sure.
Mm-hmm.
Anyway, hey, listen, so we're going to get out of here. We've done our hour. I appreciate you guys showing up as always and sharing your wisdom and your experience with with everybody. Hopefully they understand you guys do have backgrounds, that I have a background. We're not just three guys that kind of got into Bitcoin last year and, and into markets last year. So hopefully that comes across, but we'll be back next week, y'all. So hopefully you'll show up. Hit the thumbs up, hit the like, hit the share. We'd appreciate that. Follow these guys. You can follow Andrew at AP_abacus. That's an old Asian Japanese adding machine, in case you've never used one. They're pretty cool. I used them when I was a kid living in Japan. Learned about them. Very cool. And of course, Texas OL 61 there is Stillman. You guys really need to follow him. We make him uncomfortable when he gets a whole bunch of people following him. Andrew encourages it. Yeah. Tillman's like, I don't know if I can deal with this. So y'all go follow Tillman for sure. All right.
Good stuff, man. I appreciate the time. Thank you. It continues to be a joy to be on this show and to work with you. So let's keep at it. Let's keep doing it.
We'll see you guys next week. We'll see everybody else then. And I'll be back on Friday. I think Fibo can join me. I'll make sure with them. We try to get him on there every other Friday with the market breakdown show. And if Fibo can join me and he gets on there and says, I told you so, well, guess what? You're just going to have to deal with it, folks. So y'all have a great week. Trade safe out there.
You bet.
We'll see you next week. Thanks a lot, man.